You're right, guys. Let me just send out this link to the rest of our people. So, welcome to the second live trading session of the day. This is the New York Open session. So, yeah, this morning, should pick up where we left off this morning. So this morning we sent out a Shiba trade on the live stream. It's in profit, so well done for those that joined us this morning. You should be in profit if you entered where we said, and I'll just show you guys. There we go. So yeah, putting in some nice profit. Bitcoin is pushing up nicely, as you can clearly see. We are 28 minutes away from the New York Open as well as the non-farm payrolls data report. So big movement on the horizon. Let me just get the other account. So yeah, we're getting price action right now. Obviously, we've not even got the report, so there's going to be volatility, just like we mentioned. So let's see how things going to play out. We are expecting a lower figure to come in, which is just going to reinforce that Fed pivot or push towards a Fed pivot anyway. So something to keep in mind. And obviously, we'll get a continuation in kind of the rally that we've gotten recently in crypto as well as the equities markets. Yeah. So nice push in, volume starting to pick up, breaking through structure. We're looking good for a continuation up. Now, obviously, if you've been following our live streams, we have a Bitcoin position open, 2 of the take profits already here. We've added some more margin just down here. So, yeah, we've got take profit 3 at the very top of this liquidity zone, or actually between the bottom and top of the liquidity zone, so right in the middle. The top is roughly about 17,600. That's our top resistance level. That's where it was. We'll have to see how prices kind of react as they enter this liquidity zone here, but we're expecting prices to start to stall and then make a turnaround towards the top of that liquidity zone. So yeah, let's see how things kind of play out here, but they're looking good. We've sent out a couple of other trades to our members. So yeah, let's see how things kind of play out on that end. But things are looking good. Things are looking good. Associates erased most of its returns it notched through the year's first 3 quarters, running what was shaping up to be the hedge fund giant's best annual performance in more than. We'll get rid of the news as background noise for now. We'll get it back up on the release of this data. So we've got 25 minutes. We're going to have a little look at whether we can find some more potential trades. Between the first live stream and this stream, we've been scouting now, so we've got some in the pipeline. So we're just going to go through them again, see what's looking good just ahead of this data release. But yeah, guys, whilst we're having a look at some trades, feel free. Drop us a message in the comment section. If you want us to go through some TA, that is perfectly fine. Again, it doesn't need to necessarily be anything crypto related. It can be any other market related. That is fine with us. Okay, we've got a potential trade. That could blow up. But yeah, those that are joining us, welcome to the live stream. Again, so we're 24 minutes away from New York Open as well as the non-farm payrolls report. Yeah, so whether you're joining us on Twitch, YouTube, TradingView, welcome. This is the trade that we sent out this morning on the live stream. Still relatively close to entry. So, I mean, if you want to try and catch on, get involved. We are going to see whether we can get another trade released on you just ahead of this data release. There's going to be a whole load of opportunities. Momentum's being picked up in the market overall. So yeah, we're going to see some levels being broken as Bitcoin kind of makes a push up higher. Yeah, jobs data. So jobs data, non-farm payrolls. That's it. Non-farm payrolls is a jobs data that comes out in 22 minutes. That's what we want to see. So we're expecting a lower figure, which is a loosening of the labor market. So that's bullish for risk-on assets and bearish for the dollar index. Dollar index is absolutely plummeting. It's got plenty of room to go down and into. So yeah, that's what we're looking at. We're looking at a turnaround, continuation down into this liquidity zone, which is going to be bullish for crypto and equities or anything in the risk on category. So tech stocks as well will be involved in that pool. But yeah, so the other kind of labor figure that you want to have a look at is wages. So average hourly earnings, that's going to be important. So the link that the argument that you kind of want to try and digest is how the U.S. labor market is linked to inflation, the U.S. inflation, right? So a tighter or stronger labor market is going to indicate higher inflation, and then obviously if you have wage growth, so wages are going up. Then again, that's putting more pressure or upward pressure on CPI figure. And the whole problem that we're currently in is obviously inflation skyrocketing, which leads for central banks or the Fed for in this case to use its tools to bring down inflation. And obviously one of those tools is interest rates. So obviously interest rates are skyrocketing and being pushed up higher and higher, which cause a whole load of other problems. So obviously the lending of credit is more expensive. So again, you can go into kind of the impacts of higher interest rates in a number of ways, but just to put it in simple terms, yeah, it's high interest rates leads to higher cost of lending. Okay. Trying to see if we can find a nice trade to kind of hop in on. There should be some nice ones. So just under 20 minutes, 19 minutes until the NFP report. Should we take entry now or wait for the jobs data to come out? Again, it's up to you. We've taken entry. We're positioned into these trades now. You've set your stop losses relatively wide because there's going to be volatility in the market. So you're going to get institutions are going to try and squeeze either side, so longs and shorts, out of the trades, capture as much liquidity before making a large move. So yeah, set it a bit wider than where you would normally set it at. But yeah, we're positioned. We've already entered. We're in on trade. So yeah, that's how we're treating it. We are full guns ahead. Just trying to find something that actually looks appealing. It looks ready to kind of push up higher. We've got potential here. So, potential trade to take here is Kava, KAVA. We'll show you on the screen in just a second. There's quite a decent amount of potential on here. Let's go here. So, XTZ was a trade that we took this morning, not on the live stream, but we closed it on the live stream, pulled in some nice profit. It did actually manage to push up higher, but as you can see, we're at quite a strong liquidity zone here. So yeah, there's not going to be too much left in it. So Kava, where's my MEXC? Is it not on here? Let me see. Let's see if it's on. It is on here. I just haven't got a chart for it. Bear with us, guys. This is why. Forgot the T. P. Okay, guys, we do apologize if the stream is slow. It's just the connection where we live to be extremely slow. The infrastructure around here isn't great. So Kava USD will be at the top of the structure, which is just beneath that 200. So we should see a nice move if we can get momentum picking up with volume following behind it. But yeah, we got a few levels that we can place some take profits here. This is our liquidity zone. Okay, so yeah, this is probably the one that we're looking at next to take. So we're 14 minutes away. Not long. SHIB is starting to come down. Okay, let's have a little look at what's happening over here. Reason for it. Okay, we're finding a little bit of resistance at this order block here. Again, guys, this is the reason why anyone that asks us about how we do our TA, and we always start off by learning order blocks. Look how perfectly that went into that order block. It's honestly, they are so effective. They'll completely change your trading game if you don't already use them. Yeah, 100% worth it. There is a video on order blocks in the link to the YouTube in one of the playlists, so go and check that out if you haven't already. So we're seeing a little bit of a pullback. Let's have a look at how Sheeb's playing out. Completely fine too. Nothing wrong with that. So it's just coming back down, testing these moving averages, seeing what's happening. Again, guys, there's going to be volatility. So again, this is why we emphasize on setting your stop losses wide, because there's going to be large movements either way. You don't just want to get cut out early and miss out. So set it wide. Go in with less risk, use less margin, use less leverage. It's always worthwhile, especially trading news. Trading news is kind of risky, so yeah, whenever it's the case, set your stops wider, use less margin, use less leverage. But all right, we're 10 minutes out. We're seeing a little bit of a pullback, a bit of weakness here. That's fine. It's understandable if we just pushed up higher out of structure. So understandably, we're going to pull back a little bit. That's perfectly cool. Let's have a look at what's happening elsewhere. Okay. Once Bitcoin finds its support, we'll be entering long on Carver. Okay. Just so you guys know. Right, so setting up some very nice structure. Had move up, come back down. Now we went for a second test, broke through structure as you can see through here, and now we're pulling back. Okay, we want it to hold this level here. Okay, continue with that bullish structure. We want obviously your high and lows fit in, and then see a push up. So we'll be looking somewhere around these regions here to enter, to go long. Obviously, we're 7 minutes out from the data report. See a little bit of a pullback, but I don't see it pulling back too much more. So what we're going to do is we're getting very close. Just bear in mind, guys, this report is going Wi-Fi provider or providers. We've gone through so many. It's just because we're in the middle. Yeah, there's nothing we can do. I've even got a booster right next to me here as well, so connected to the Ethernet, and yeah, it's one of them. But as long as you can listen, you can still hear my voice, so that's all that matters. You'll be able to get in where you need to, so it'll be all good. Let's have a look at Sheeb again. Sheeb's making a bit of a pullback. That is fine. We've got some nice liquidity just here and where it currently is. So we're 6 minutes out now from the move or the report, sorry. Okay, it's finding support here. Okay. Just keep on having a look at what's happening elsewhere. Okay, it's fine. That's fine. It's fine. It's fine. It's fine. It's fine. It's fine. It's fine. All right, 5 minutes out. So have a look at Carver. Has it found a bit of support? Once it's found a bit of support, we can go. Okay. Let's go for it. Right, we're going to enter Carver now. We're going long Carver, SL at 0.85. So we're giving a little bit of room to maneuver. Okay. Let me just send it in to here. Let's see what it brings. Let's get it. Okay. Right, we'll add the signals onto here. It's currently holding. Just expect volatility with 3 minutes out. Sheep's finding some nice support. Okay, just expect there's going to be movement either way, and then the market's going to take a few minutes and then it's going to make its direction. Okay. Right, 2 minutes. All right, let's see what we're getting. All right. Oh, sorry guys, you can't see what's happening, can you? Some very, very nice volume on the way up. Very weak sell side. Very weak sell side. So let's see. I think at the moment it's looking relatively good. All right, we're a minute out now. All right, a few seconds. Well, it's going to be an instant reaction by the looks of it. Very, very volatile going into it. All right. All right, here we go. What have we got? 263, relatively heavy. Okay. All right, let the market decide its fate. Still a strong labor market data, that is. All right, the market will decide where it wants to go. So, 263,000 is what it's come in at. Forecast was 200. Previous was 284. So we saw a slight reduction. However, it's not exactly what you want to see. Now, the JOLTS data that we got was basically showed the same thing. And markets did push up higher off it. See, so we got the dollar index making a move up higher. Going to give it a few minutes, see which direction the market really does want to go in, and then we can go from there. Still holding on to support. Again, guys, something that we said in the update, sorry, the live stream this morning, was prices could go deeper into this liquidity zone here. So that's what we're getting currently. So there's a lot of support at this level. Well, obviously the moving averages just here. So let's see how things can kind of hold up. Right, Carver's holding up nicely as well. All right, what else have we got? Average hourly earnings rose, both on year and month on month. Okay. So again, bit of wage inflation on that side as well. So I mean, the labour market is still looking relatively tight. All right, dollar index is now coming back up to resistance. All right, market is now settling in. we'll see the true direction once, obviously, they've had a little bit of time to basically digest this data. Carver's making a nice move back up. Show you. Very nice wick on the bottom. Wick on the bottom as well. So we broke through this liquidity zone here. Found very nice support. Very, very good amount of volume coming in. Everything's holding on to the liquidity zones as supports. Things are looking relatively good. Just need to see. So again, something that we spoke about this morning was for the dollar index to come and push up to this level of support, which it's currently at, which is obviously that 200 moving average on the daily, which is really, really, really important. So let's see how things kind of develop. If it can kind of find resistance here and start turning over, can say goodbye to the dollar's value, and we'll see a push back up in prices in terms of crypto. But again, this is kind of as I've expected. We were expecting a slightly lower figure from the NFP, kind of closer to that 200K forecast. I mean, we came in a decent amount above it, so yeah, it's lower than previous, but much higher than forecasted. So again, it kind of leaves you in a little bit of a grey space. It's still indicating a relatively strong labour market. However, if you compare it to previous months, we've come down a decent amount. So again, it's really how the markets are kind of going to digest this figure, really. Came in very, very nicely into this liquidity zone just there. Bam. Can we long BTC now? You can long it, yeah. Again, you need to set some. Let me give you a stop loss to set it. So in terms of setting a stop loss, I'd probably set it around 16.4. So all the way down here. Yeah, give it a little bit more space. We can still come down. At the moment, we're holding on to some nice support here. So we'll see how things kind of can develop from here. Tapped into this liquidity zone, just hit this order block here. Just found sensitivity just above. So we can dip just a little bit more if it wants it. If it's not found enough support, it'll come down just a tad, a little bit more. Okay, so what's going to happen on a lower time frame, right? We're going to come down. I'll let you know when to long it. So what's going to happen here, and what you're looking for if you want to long Bitcoin, is on the 1 minute. So if we have a look on the 1 minute, so it could come down back and revisit one of these levels here. So we'll see how things can kind of develop. If they push up higher, all you're looking for is a nice pullback, wick on the bottom, and then a continuation back up. You want to see that pick up in volume as well. For now, everything's holding relatively well. In terms of Carver's holding nicely. Again, following exactly what we drew. Came into this order block here. Perfectly fine. All right, dollar index is finding some resistance here, which is nice to see. Let's have a look on the lower time frame. Okay, so it's picking up. All right, we want to see a bit of support here now. All right, you can go long now. You can enter long on Bitcoin from here. Yeah, I'm starting to see a little bit of weakness on the dollar, which is good. Starting to see a little bit. There might be a little bit more downside, so just bear in mind. Don't put in your full margin here. Split your margin up for a potential just a little bit more downside, and then see whether we can get a nice rebound. But for now, this is looking okay. Yeah, you want to set your stop loss around 16,400. Give it a little bit more room. I mean, he is at very strong resistance. So if it's able to hold this, the markets will flip. So obviously, as you can see here, we're testing this level. Okay, we want to hold this level, and then we'll be looking good for continuation down to the downside. If we break up and above, then it's looking likely that we're going to be moving up for the dollar and down for risk on. Right, dollar index is starting to make a move to the downside, which is good. Okay, we're looking good. We're looking good. There's a bit more promising. We just need to make this break. I'll show you. Lower time frame, what? 1 minute. We're holding that level of resistance, which is really, really key. That's your kind of pivot point. So as you can see here, we're finding a little bit of support. Ideally what we want is a break. If we got a breakthrough here, then crypto is just going to flip right back up to the buy side. What do you mean? What do you mean? Gotta stay clean. Go on. King like Kong. Alright. Love something. Let's digest some of this data ourselves. Unemployment rate stayed the same, 3.7. Ideally, we would have wanted to see unemployment rate go up. So a very mixed bag of data, really. It's not exactly what you want to see in terms of a calling off. Labour market is still relatively tight. Yeah, you would have wanted to see a bit more of a jump. We didn't get that. However, it's lower than previous. So there's signs of things starting to slow down, but it's not exactly the slowdown that you really want. You want a bit more of a slowdown. So things are still being relatively strong. You right, T Smith? How you doing? I'm good, my man. Let's see if we can get some profit out this move. The moment we're currently holding nicely. Yeah, we're just waiting on the dollar index to really make a move. I mean, it's up on that data. However, we should be looking at it coming back down, which is going to put a bit of strength on crypto. So have a little look at what's happening over in the equities markets. So they're down. But again, we are holding nicely. Dollar index continues to come down. As you can see, we broke through the structure here. Yeah, we're holding on to support nicely. Carver's pushing up. So again, still holding that positive structure, exactly what we want to see happening. Have a look at some of these other alts. Litecoin's looking sweet. Bounced off this support zone perfectly. Very nice. Sand's holding. Ethereum's looking slightly weaker. Understandably, I mean, it's very close to that strong level of resistance. But yeah, dollar index continues to fall, which is what we want. We just need Bitcoin to start making some moves, building up some positive structure here, but we need it to really start pushing towards these moving averages. There's going to be a bit of resistance at this order block and those two moving averages right here. But let's see if we even can get up there first. All right, got some support here. If we're able to hold, already tapped it once. If we can hold it here, we should see a little bit of momentum picking up. Very, very weak volume follow through, which I mean isn't exactly ideal. We do want to see some buy side kind of coming in here. But the dollar continues to fall. I'm going to play a little bit of news, see.
Including in wages, that's really what stands out to me. The quiescent market off the shock. We were featured negative 60, negative 70. Now S&P futures at negative 55 as well. An eventful Friday. Stay with us on Bloomberg Radio and Bloomberg Television. Good morning. Brace yourself because I know you hate it. Good news is bad news. Live from New York City this morning. Good morning, good morning. Equities heading south as payroll surprise to the upside. The countdown to the open starts right now. Everything you need to get set for the start of U.S. trading. This is Bloomberg The Open with Jonathan Ferguson. Farah.
Live from New York, we begin with the big issue. It's Jobs Day in America.
The jobs data?
This month's employment report. This surprise to the upside. The story for 2022 has very much been one of the Fed and rates driving equity markets.
We're all subject to the data.
It's payrolls, it's CPI, it's the Fed into year end. How the Fed reacts to all of these numbers.
But we want softer jobs. We want softer jobs.
The Fed is slowing the economy down. That's exactly what it's trying to do.
The Fed can't stop until the labor market starts to slow down.
We heard from Powell. They're going to moderate the pace of hikes going forward.
The Fed is going to look through it if it's a very strong print.
The labor market has not cracked.
What you see is stocks are down and bond yields are up.
Wages are still going up at a very rapid clip. It's the wage data that's driving it.
We are not getting softer jobs. Mike McKee joins us now for more. Morning, Mike.
Yeah, John, it was a surprise to the upside. 263,000 jobs created, which is actually a decline because October was revised up from 261 to 284. So the last 2 months has seen more strength in the labor market than anybody anticipated. We do see 3.7% as the unemployment rate, same as it was the prior month. The participation rate drops a little bit. I'll get to that in just a second. But everybody in your roundup there was focused on the same thing: wages. Average hourly earnings up more than anticipated and up at a 5.1% rate, which is higher than the 4.9% in October, the revised number. So we're still seeing wage gains, and that's what the Fed doesn't want to see. Now you can see here on the chart, some of that is base effects, but they should be going down now because the base effects in the most recent months are for lower inflation. And then you look at where we are, we're way above it. The green there is where the Fed would like you to be, between 3 and 3.5%, so 5.1%. Still way too strong for Jay Powell and company. The numbers are showing it's the goods versus services wages. Powell was talking about services wages. Well, they were the ones that were up significantly during the month. They were up by 7%, almost 8%, whereas goods producing only 0.4%. So this is kind of exactly the story that Jay Powell described the other day when he said that service industries are the inflation problem right now. The interesting thing about the unemployment rate is that we saw the household numbers decline. Employment declined in the household numbers, but 186,000 people left the labor force. Not what you would expect around the holidays. Maybe a seasonal adjustment problem, but it does suggest that there are still going to be job openings, a lot of job openings, according to the JOLTS numbers, and we're not getting the workers in the labor force to fill those. I note that the president is going to speak later this morning on the Railroad Act. I'm sure he's going to talk about the economy. He does have something to brag about, and that is for Black Americans, Hispanic Americans, and Asian Americans, the unemployment rate all went down significantly. It was only white Americans, and in particular those without high school degrees, who saw a decline.
Mike McKee, thank you. We'll catch up with Secretary Walsh on some of those themes in about 40 minutes' time. Let's push that data through this market. Equity futures down by 1.5%. Equities down. Yields up by 12 basis points to the front end. Your 2-year 435. Dollar stronger by 0.5% on DXY, back through 105. Joining us now to discuss fantastic lineup this morning: Mohammed Al-Arian of Bloomberg Opinion, and of course Queen's College Cambridge and BlackRock's Rick Reeder. Mohammed, first to you, sir. Your take on a jobs number from 30 minutes ago.
So I would summarize what Mike covered really well in 3 comments. One, it is good news for the economy in terms of jobs and pay. 2, it is less good news because labor force participation fell and inflation prospects are still worrisome. And then finally, it is bad news because once again, Fed communication has contributed to undue volatility in markets.
Rick, your take?
Agree with all of that. So I think the one thing that's jaw-dropping If you look at this number and you break it down, the service sector of the economy, look at 82,000 jobs in education and health services, 88,000 in leisure. The service sector of the economy, which is not interest rate sensitive, education is not exactly interest rate sensitive. The Fed raises interest rates. The goods economy, I would argue, is moderating significantly. I always find the markets focus too much, like in the 80s when you had a goods-oriented economy. We have 80% of the jobs in the country are service-oriented. And you think about the demand that still has to catch up. You see this in airlines, you see this in restaurants, you see it in hospitality, you certainly see it in healthcare. That's hard to bring down. And by the way, not as interest rate sensitive. The thing that I think is critical is the interest rate adjustment. You see what's happening in real estate. That's having an impact. That's interest rate sensitive. The other parts of the economy, you see, boy, you got it in shining lights today. It's hard to bring down the service economy.
We're going to talk about Blackstone and what's happening in real estate a little bit later, so brace yourself for that. I'm looking at rates right now at the front end of the yield curve. The 2-year at 4.35. Now, Mohammed, we've got a move today, sure, of 13 basis points, but these aren't even the highs of the week. We started the week opening up the week on Monday at 4.45.46 on a 2-year. Mohammed, the reason we're lower on the week still on 2-year yields is because Chairman Powell spoke on Wednesday. Now, you went through this piece by piece in response, in reaction to the jobs number we got 35 minutes ago, Mohammed, and you said this Fed is contributing to market volatility. What is it that Chairman Powell did on Wednesday that you disagree with?
So I said it contributed to undue market volatility. Is the undue part, excessive market volatility. Look, I think once again, the Fed did not understand the technicals. Once again, the Fed didn't understand the behavioral aspects of markets. So while Chair Powell went out of his way to be balanced, he did a few things that made the market hear just what it wanted to hear. First, confirm that we are downshifting in December. Second, do this ahead of the labor report, suggesting that maybe he knew something that others did not know. Third, talk about risks being now balanced, two-sided, and bring in his colleagues on the Fed. And then what he didn't mention, John, he did not push back in any way against what already was a significant rally in markets and a significant loosening of financial conditions. So while he said other things, and he was right to say other things, including warning about inflation staying, warning about our job not being done, he didn't realize where the technicals of this marketplace were, and he didn't realize the behavioral aspects. And that's why you got this overreaction, and now we're giving some of it back.
So, Mohammed, the equity market is basically back to where it was at the end of August when we heard from Chairman Powell at Jackson Hole. You talked about that easing of financial conditions off the back of the speech, the address from Chairman Powell earlier this week. Mohammed, do you think that means they have to go even further than we expect? And based on where you think the terminal rate's going to be, when they deliver projections on December 14th, how much higher up do you think that got in 2023?
Declining, which is good to see. So obviously the market took the news quite well. However, in terms of the technicals, we're still whether it can basically push up and above this level again. However, I mean, as things stand, it's quite clear that it's struggling to break through that. So
June projection for year end 2023
going to take a little bit of time. Again, we were expecting it as well. Obviously, it came in higher than expected. So, again, kind of giving us this volatility turn. Push lower in crypto prices as well as equities, entering risk on.
Big changes at the Brookings was when he said, actually, that we would.
Obviously, that Fed speech didn't help, and how Jerome Powell went about it.
And that was a really big deal.
I mean,
that you could
it's probably still looking likely that
was a big deal for markets.
It's going to come in cooler
go back to my point.
in December's interest rate decision. Obviously, it does really depend on that CPI as well.
For a while, it is restrictive where you're gonna pause.
I guess
once
some structure has been built up and we've made a second move, markets will then start to settle in and look ahead towards this CPI report on the 13th of December.
And I I still think they got to go to around 5-ish. But again, I don't think they need to go much further than that.
But yeah, all eyes on the dollar. Again, guys, something to bear in mind, it's Friday, so yeah, we're going to need a move happen. Ideally by London close at 4:30.
They can just reverse it and cut interest rates.
If not, then I guess we'll kind of see if New York close can bring anything. But yeah, we're going to then have a period of very low volume over the weekend, most likely. And next week we haven't got a great deal of data either, so yeah, we're going to have to see how things are kind of left off today, this evening, and then kind of what they've done over the weekend, setting up for next week for the new week.
475 basis point rate hikes in subsequent fashion. Now we're talking about, are they going to do a 50? Maybe they do another 50, but they're probably going to get to some 25s. That's a really big deal. I don't think, when you get the 10-year note at 350, as it was previous number,
Dollar index is making a move down.
70.
Good to see.
And you've got a
So it's cancelling out the gains that I've just made.
See it rallying a lot from that level. So what I think the big deal, and particularly the front end of the curve, I think rate volatility, that to me is the big dynamic, which has huge ramifications for other markets. If the volatility, the risk-free rate drives volatility down the credit stack, down the capital stack, and if that stabilizes a bit, it's good for markets. Again, I don't think it means big rallies in rates at all. But what I do think it means is a bit more stability than what's been an incredibly tumultuous year because of the risk-free rates moved so much.
If you have more confidence that you can price the risk-free asset, Mohammed, you should have more confidence that you can price risk. I get all of that. The problem we've had over the last 12 months is just how much Fed funds has moved relative to what we expected 12 months ago. Mohammed, you've always said about the need for humility in this cycle coming out of the pandemic. 12 months ago, this Fed had in their SEP for year-end 22, 90 basis points on Fed funds looking out 12 months. Mohammed, as you look out into next year, what do you think we need to be a little bit more humble about?
So first, I think we just have to be humble about how the economy will respond to the lagged effects of what we've already seen. I've warned, look, I'm not where Bloomberg Economics is, it's 100% probability that we fall into recession. But also I warn, be careful. Don't just say, it doesn't matter because it's going to be short and shallow. That's the same trap as transitory inflation. Transitory inflation meant look through it. Short and shallow recession means look through it. No, keep your mind open. The other thing, I completely agree with Rick that we're going to see a decline in rate volatility, but understand that that is happening at higher levels of rates. And that's what you have to balance, because while the rate volatility will come down, the higher overall absolute level of rates as the Fed keeps on marching up is going to have its own impact on the markets. John, I think we're mostly through interest rate risk. The qualification being the Fed must not contribute to more volatility by saying things that is better not to say. But we're going to talk a lot about credit risk next year and a lot about differentiation both across jurisdictions and within jurisdictions.
Well, you've mentioned liquidity risk several times as well, Mohammed. Can we talk about that a little bit more? Blackstone, I'm not sure how familiar both of you are with this story. I'm going to read out the lead paragraph from our write-up of this story today. I'm going to ask you both to respond to it if you can. Blackstone's $69 billion real estate fund for wealthy individuals said it will limit redemption requests. We're calling this one of the most dramatic signs of a pullback at a top profit driver for the firm and a chilling indicator for the property industry. Mohammed, when you hear that story, and the FTE's done a nice write-up of it as well, how do you respond to it?
I'll tell you what I tweeted earlier, Jonathan, which is that this speaks to a much bigger phenomenon. When you run a financial system at very low rates and abundant liquidity, the financial system will optimize those conditions. And one of the ways in which it has tried to optimize those conditions is by offering relatively liquid products on illiquid asset classes. And we've seen that happen in several places, including in real estate. So when you offer relatively liquid instruments on illiquid asset classes, and the asset class becomes truly illiquid because the financial conditions change, you get what you're seeing in Blackstone. So I think there is a general lesson to be drawn here. and one that we also saw in a different way.
So where we at?
Just keep an eye. They pop out from almost nowhere, but they speak to exactly the same.
So a little bit of a prop up, yeah. So again, it's going to set some levels. So ideally, we do want to start making a move relatively soon.
Only tangentially, and I wouldn't.
If it starts sticking to the structure, it does look like we're going to get a break to the downside further into this liquidity zone down here.
The system, as Mohammed said, things that shouldn't be.
But yeah, the market's going to settle in, kind of digest it really.
That are dicey in terms of, and you look at how now your interest coverage is declining in some of those spaces. That's where you got to be careful.
To our point, is a very, very data-driven market,
as
clearly shown today.
It's not like it was in full stop, not even close to where it was in 07. But there are places, and you saw it play out this week, that there are places in real estate, which is again why I think the interest rate tool, you got to be careful because it's blunt, and 3/4 of the wealth in the country by people is in the house, in the home. And so that's part of why I think, as Mohammed said, get the rate to a level. You got to let it marinate a bit at
remarkable. So what crypto market are you looking for, bro? What you mean? What crypto market are you looking for?
Structures that get in an environment where
so we're in Carver in terms of you asking for trades. That's the case. We're in Carver, Shiba. We sent out two trades on this live stream. So one earlier on today, and one on this current one. I'll show you. Let me just pull back the chart and got it here for you. Now we're just waiting for some levels to kind of be tested. Hit 2 of our take profits. So we are expecting prices to push back up and move towards this liquidity zone again. So yeah, we'll see how things kind of play out. Yeah, it could be the case that we do just topple over and start to really break down levels, kind of price levels once again. So yeah, it kind of really does depend whether the dollar index can really push past this level above that 200 moving average on the daily. An eye on this dollar.
About the future of work,
dollar's value.
Living in that future.
But for now, I mean, it's showing weakening signs. It's beneath that 200 moving average on the daily. Come up, tested, rejected by the looks of it. So if it's able to continue to break down, will be good for a push up higher. Again, it kind of does look like we're just going to kind of range a little bit and test some support and resistance. We might see some moves on within the altcoin market just because the Bitcoin dominance is so low. So like whenever Bitcoin kind of makes a break out of structure, you'll see some of these altcoins that are at breaking point really break out. But yeah, as you can see, we're just going to be building up on structure here now. It does look like we're going to come down a little bit lower. So the overall trend that we're looking at is for things to move back up. So yeah.
Doesn't mean because we are going to pass this, God willing, by Friday, by the time, by the weekend, that I'm going to back off a paid leave. I think we're going to get it done, but not within this agreement. We're going to avoid the rail strike, keep the rails running, keep things moving, and we're going to go back and we're going to get paid leave, not just for rail workers, but for all workers.
AMH joins us now down in Washington, D.C. Anne-Marie, a difficult decision for the president this week.
Yeah, it is a difficult decision, Jonathan, but he was asking Congress to impose this legislation of a tentative agreement he struck with the groups and the union bosses and the companies back in September, and the House and the Senate did just that. So the president this morning, in addition to his schedule, will be signing it and giving some remarks at this at 10:15. He was asked about it yesterday, and his take was no one else could negotiate the deal that he was able to negotiate, and that in the end, he got more for workers than they ever would have gotten. But his point is that he's going to continue to fight for paid sick leave, not just for rail workers, Jonathan, but in his words, all Americans.
Can you be the most pro-union president if you're forcing a deal on workers that they didn't vote for? Anne-Marie, down in Washington, great work as always. We'll hear from Secretary Walsh in about 20 minutes' time on this theme. I wanted to get a final word from Mohammed and to Rick as well. To the both of you, I got this over to Bloomberg from a terminal subscriber. I want to share it with you both about the unusually wide dispersion about understanding the health of the economy, the real-time economy, and real-time economic activity. And Mohammed, you often talk about this. To work out where we're going, you have to know where we are. Mohammed, do you think it's difficult to work out where we are at the moment?
It's more difficult to work out where we're going, John, than where we are. And that's because so many things are moving. This is a time of structural change, not cyclical change. And structural change have a tendency of feeding onto each other. So I find it hard. I encourage people not to think in terms of a normal distribution, a bell-shaped distribution.
By the looks of it, so the markets are still holding on to that hope.
Many possible outcomes.
Dollar index isn't really making too much of a move. It's falling back down after it's obviously moved up on that news. So again, we'll see how things kind of look once it's found a bit of support. Whether it can push back up and past it. 618 is lining up nicely with that 100. So yeah, we'll see how it looks once it finds support, how strong it looks on the move back up. If it continues, if the buyers look weak on the move up, and it's going to indicate to us that things are going to move back down. Yeah, that's kind of what we need to kind of know as to where the markets are expecting and looking at the current situation in the US economy, right?
It's ambiguous as to where we go from a growth, how far the central bank has to go. By the way, not just the U.S. central bank has to go. And so think about where can you get convex return and sleep at night alongside of it. I think that's the key for 23.
Rick, isn't it great that Mohammed finally showed up for a Payrolls Friday with us? How many months has this been?
No, we missed him. I missed him.
We did miss him.
Rick and I agree, so you don't need me.
Everything's holding on to support currently. It's just waiting.
Mohammed, it's great to catch up with you, as always, alongside the brilliant Rick Reader. As always, we've got to keep doing this. Every Payrolls Friday, the two of them together, absolutely fantastic. Coming up next on this programme, morning calls, and later, Labour Secretary Marty Walsh joining us with the admin's reaction to the upside surprise payrolls report we had about an hour ago. From New York with futures lower, this is Bloomberg.
We've got potential double top, yeah. Something to also note, guys. See this move down here, very, very weak sell side. This move down here, very weak sell side. Normally what you want to see is strengthening sell side for continuation. And a little bit of support. Either side to look relatively weak as well.
Good news is bad news. It drives us all nuts. I know. Upside surprise on payrolls and equities drop like a stone. We're down by 1.3% on the S&P, down by 1.8% on the Nasdaq. That's the price action. Here's some morning calls. First up, JP Morgan adding Johnson Controls to the focus list, expecting significant operational changes to fuel the stock's outperformance. RBC downgrading DoorDash to sector perform, noting the company's slowing growth and competition stealing market share. And finally, Wolf Research downgrading Salesforce to peer perform. Moving to the sidelines as the company enters a new and difficult period of slowing growth. That stock is down by 2.4%. Coming up, iCapital's Anastasia Amoroso and PGIM's Mike Collins breaking down this market with futures breaking down 1.3%, and later, Secretary Walsh on the labour market report in America.
Development strategy for news based on have you had news based on making it before?
Right, Sellers going to make an attempt to break out. See whether they can strengthen. Dollar continues to look weak. Sellers are still weak. Sellers are weak. Okay. See if we can break through this structure here on the lower time frame. Got a little bit of movement. Okay, we're on the test. Right, so this is the structure that you're looking at. Right. Hopefully we can break up and above. If that's the case, we're looking good.
About 20-something seconds away from the opening bell. Good morning to you. Equity futures deeply negative. We're down 1.3%. On the S&P 500, on the Nasdaq, we're down by 1.8%. On the Russell, the small caps lower as well by 1.4%. Data beats to the upside. Equities drop like a stone. Yields take off at the front end, and the dollar a whole lot stronger. As the opening bell, switch to the board and get to the bond market. Yields look like this on 10s. Only up now by 6 basis points. The move fades just a little bit on a long end, particularly on 30s. Basically unwound the move. Post payrolls in the last 60 minutes on a 30-year yield. Only up there by 3 basis points. The move sticks at the front end, just on the Nasdaq. We're negative by a little more than 1%. On the S&P, on the Nasdaq, we're down by about 1.4%. with the price action for you. Here's Abby.
Well, John, this is a really interesting one because it certainly is not the Goldilocks report that traders have been expecting, but a beat of 63,000 jobs is much smaller than some of the other beats or misses that I can remember in recent times. It shows you how tightly wound traders are because, to your point, we do have stocks plunging. Take a look at the S&P 500 E-mini futures really showing it off the lows, but nonetheless down 1.1%. That index flirting with a possible decline on the week and the big move in yields. Now, you are
S&P
right,
making a recovery, but the Nasdaq moving back up. Decent volume coming in as well. So
hiking, and for the February meeting now, there's a greater than 50-50 shot that they may actually hike by 50 basis points. So a bit of a change there, weighing on big tech because, of course, a bid for bonds, or excuse me, a bid for yields going higher, price going lower, means that the dollar index is bid up. That's pressuring big tech. Valuation growth really comes into question. Speaking of the dollar, John, it's really interesting because we've had so many folks recently talking about the demise of the dollar. But on this report, there you have the Dixie finding support right around 105. There's a pretty good chance you could see a fast move up toward 108. If that happens, that could really pressure all the risk assets as, again, they become more expensive.
Abby, thank you. To continue the conversation, joining us now is iCapital's Anastasia Amoroso and PGIM's Mike Collins. So to both of you, first of all, just your reaction to the jobs number, which is 60 minutes old now. Anastasia, first to you.
Well, it still shows a solid labor market. And, John, as you know, it flies right into the face of what the Fed is trying to accomplish, which is to see the cracks forming in the labor market, and there just are not at the point at this moment. And there's two particularly concerning things within the payrolls report, which is the fact that the labor force participation rate has.
All right, guys.
And also wages is still
the way things are looking at, like,
and again,
we're going to get pushed back up.
So the Fed, of course, is trying
Test
to break this
one of these levels out, come back down, test, kind of build up on some more structure. Probably see a bit of prices compressing, and then making its move. We broke our structure here, okay, coming up to a bit of resistance. So yeah, does look like we're going to push up higher. Dollar index is making a move back down to the downside, so we'll see how it kind of reacts around these levels, and then how strong price action is on the move back up. It continues weak and finds resistance relatively quick, and then the sellers start to really dump it again. Yeah, that's all that we need in terms of kind of knowing the direction that things are going to take for the rest of the day, moving into next week, and that will be obviously to go down. Crypto to go up, dollar index to come down. So yeah, at the moment, obviously we got Carver open. It's pushing up nicely, still setting up that nice structure. High, low, high, low here. So until it really breaks through this structure here, ideally if it breaks through this 100, then it's looking like it's going to continue down. But it does look like it's going to come up and test or attempt to break through this structure here. We get a nice break. Our TPs are in line. So we'll see how that plays out in terms of our Shiba trade. Yeah, as you can see, prices are compressing. We're seeing a bit more buy side coming in. Okay, so I presume it's going to stick to the wider structure again, which is prices compressing into a symmetrical triangle, as you can see. So we're looking to hold. Obviously, we've got a strong level of support here. So we'll see how things kind of react. Probably set some structure again and then ramp up once the dollar index and Bitcoin have kind of found their ground and direction. I mean, in terms of Litecoin, as you can see, rebounded perfectly off this nice support level, kind of sticking to this descending channel. So again, we could see a very nice break up to the upside if Bitcoin is able to follow suit and move higher. Sands, setting some nice structure. I've got Ethereum. Ethereum's not really done a great deal of much. Again, Ethereum's probably just holding on and waiting for Bitcoin to really kind of make its move. I mean, after that report came out, obviously we got a decline in prices. A whole load of demand got brought in here past this level, at this level of liquidity. So yeah, the way it's looking like it's going to move back up, come back down, set some structure, and then decide which direction it really wants to take. I presume markets don't really know exactly how to take this data. Okay, so we'll see how it plays out. But guys, thank you very much for joining us. Yeah, the Carver trade's currently in profit. Shiba's just underneath, so slightly in loss. So we'll see how things kind of play out. But yeah, thank you for joining us. Let's see how things can kind of close off today. Obviously, a next level of volume is going to come in on European close at 4:30 UK time. So keep an eye out on that. That's the next kind of point to really look at where things are at. As you can see, I mean, Bitcoin's really trying to push up higher now, see? So yeah, we'll see how things kind of play out between now and that London close. But as you can see, markets are making their decision and wanting to push things back up. But yeah, thank you for listening, and we'll touch base with here. We'll be pushing all the way up to kind of the max level at 17,600 or 17,560 as we got here. Our take profit 3 is at 17,400. You can set a take profit 4 if you want at the very top. But yeah, we'll probably be looking at the area. The more it's going to struggle, there's going to be a lot of supply being chucked in on at that level. But yeah, guys, thank you very much for touching base with us. And yeah, hope you enjoyed the rest of your day. Let's see how things kind of play out here. But yeah, fingers crossed. Cheers.